Hey, what is up, dudes and dudettes? This is Diligence here. I think it is time for us to do a summary on today's FOMC meeting. For those of you who don't know what FOMC meeting is, basically we listen to this guy talk, and we call this guy J Money. Why? Because he is the chairman of the Federal Reserve. And whatever he says on the FOMC meeting, every single one have a tremendous influence on the market. You will see some capital inflow or capital outflow depending on what they're going to do in terms of their monetary policy. And their monetary policy sort of somewhat influences the physical policy of the United States. And right now, one of the hottest topic is tapering. So you guys are gonna be like, what is tapering? So basically, when COVID happened and when people are basically hanging on a thread, and don't have any money, and a lot of companies are in debt, the Federal Reserve started buying assets from the market. This is what quantitative easing is. And what does taper do? They stop that quantitative easing process. And what most people think the effect of that tapering is that we will see a pullback on the market or even a crash, right? But hey guys, good news. While I was enjoying all these beautiful eye candies on college campus and listening to J Money talk about the market, guess what? I take some note for you guys, okay? Not everyone loves to listen to this old man talk about economics for 54 minutes and listen to reporters. Some are hot and some are just old guys, okay? Asking repetitive questions about, the economic outlook. But in general, what you really need to notice here, okay? First point is nothing changed really. J Money said the interest rate is going to stay the same. Taper is not going to happen until the next FOMC meeting. And, everything depends on this mysterious, nefarious thing called substantial further progress. And I quote, substantial further progress is in progress. But while the test of determined substantial further progress is still in progress, the Fed decided that it's not time to taper and it's not time to lift the interest rate. So you guys are like, what is that supposed to mean? Well, if you go back and look at our nicely laid out beautiful SPY, you will see that as we predicted on Monday on the pullback day, I was on Patreon, I was on Discord, I was on YouTube and talking about it's a buy the dip sort of action, and I tell everybody that the Evergrande crisis is literally bullshit. Doesn't really matter. This capital outflow from the market is actually triggered by something else, right? And I will make another video about the Evergrande crisis is actually a sort of like a smoke screen to literally mask this liquidity change in the equity market in general. And Monday, due to the fierce switch from like super sort of like in the midst of determining whether it's going down and going up or going down, to the huge negative volatility spike, which induced the VIX to go extremely high and even gapped up. And guess what? On Patreon, we said that our play is we shorted the VIX. What do you mean by shorted the VIX? We literally just buy some puts on the VIX that we think it's gonna reach that level. And we made some pretty good money on Patreon. If you want to find out how much we made and you want to, join Patreon and make those very timely bets that including, the VIX, some iron industry move, vaccine moves, oil moves, or even just random AMC swing trades that'll make you 5 to 7% a day, check out our Patreon, okay? And let's continue with the FOMC meeting. So, what does this nefarious substantial further progress even mean, right? It's something that a lot of economists are saying you either get it or not. Because it really is a very nefarious thing. Like, you cannot really, the Fed is not going to publish what exactly tests they're doing. It's literally a bunch of, young people, old people, people from different backgrounds, diversity, women and men sitting in a committee, probably get free Burger King or McDonald's if they're sponsored, get some Coke, right? And then they sit down there and drink the Coke. Yeah, not doing the Coke, but drink the Coke, right? And maybe get some, alcohol and entertainment afterwards. But when they're in the committee, they sort of evaluate the employment rate, the labor participation rate, the economic condition in general, and the inflation level, and they sort of set up a soft benchmark for themselves and be like, yeah, this is a good point. So for J Money, the soft benchmark is around, let's just say 2% on the inflation on the sort of longer run sort of outlook. What do you mean by a longer inflation outlook in sort of like a longer period of time, right? So for example, right, so September, August, June and July, we Americans all have about 5.2% inflation rate. That's actually pretty high, right? During one of the highest inflation period of time, which is in the 1990s or like late 1980s, like 1988 all the way extended to 1992, you have around like 4% inflation. That's already pretty high, right? But right now we have 5.22% inflation compared to last year, which is, well, it's there's a lot of reason to unpack inflation. Okay, we're probably gonna make another separate video. But what J Money is trying to say here is, hey guys, like in the medium term, which means like in the next 2 or 3 months, if we stay at 5.22%, then hey, we're gonna be worried. But by the beginning of 2022, expect to see the inflation to draw down to 2%. That's literally what he means, okay? Let me just unpack for you. But again, we're not financial advisors. We do not give financial advices. Everything we say on this channel is for shits and giggles. But most of the things, at least 99 of the things, are factual and the truth, right? We're just paraphrasing, unpacking, and summarizing the J Money meeting for you guys. And according to J Money, the taper is gonna be done before June 2022. So the latest is around June 2022. But again, the previous chairman of the Fed also say that, oh my god, we're gonna taper next month. But Guess what? A lot of times, due to Congress want more money, the economic situation changes, And if you really evaluate the economic situation right now, the shipping situation overseas is not going to really change until this lambda, mu, pi, and delta, whatever alpha variant of COVID actually phase, and people stop wearing masks. Then the shipping situation is going to change a little bit, but not really, because the entire shipping transportation industry is actually a little bit dated and corrupted, not transparent. Therefore, their margin rate sort of take a toll on the customer when they're paying for the product. But again, like all of these like play into this whole inflation narrative, and honestly, tapering, it's a little too early to talk about it. But if you really are really pessimistic, then the earliest tapering is probably gonna happen around November. Or like after Christmas, if they're really being cruel, and if inflation is really going off through the roof, then we will see probably a point 0, the highest 0.05% interest rate increase. And according to J Money, the rates hike, which is the interest rate hike, will probably take place after tapering happens. So let's just say the latest, June 2022, the taper happens, and it's probably gonna raise the interest rate to about from 0.25% to about like 0.5%, or probably like 1%, because a lot of Americans still have a lot of cash in the bank, and it's a very debt heavy economy right now. A lot of people are utilizing debt and leverage to sort of making their business afloat. And then if you actually truly look at the data, how many people are actually going out, drinking and all this shenanigans and partying and restaurants, not that much. And again, 70% of the entire US economy is service industry, right? So until we really see the reopening factor kicks in, none of these broader economic conditions is going to change, and none of those monetary policies is really going to change. So what does it really mean for us? So for us traders, that means SPY will probably have another run. But to what extent is it going to fill this gap? It really depending on how much liquidity actually is out of the market. What do I mean by that? That means if you see this little gap over here, right? That means there are a lot of capital just outflowed on that one particular day, probably pre-market, and you will see a lot of safety puts on that day, and sort of like it's somewhat a quote unquote unexpected crash. And then we expect, today there's gonna be a pull up, right? I said it before on my previous video from yesterday. The most likely situation is gonna have a pull up, and when you have a pull up, the small caps are gonna lag a little bit because a lot of people are trying to rest their money in a safer bets right now. Just because the economic condition is still uncertain, especially leaning towards October. But the period from now to October 17th actually, we're pretty safe. We're in like the margin of safety. So if the market is set to be super bold, then we might have an all-time high, like in that range, right? We have at least 2 weeks of trading range there, or the market is being a little bit conservative, probably gonna fill the gap and trade really softly or really conservatively, or just trading sideways around like 445 if you're a spy trader, right? And if you buy anything around here, then good for you. And if you follow our trades and bought some VIX puts, good for you too. That's a pretty good that's a hefty just a 2 day sort of a winning play here. And I talked to my Patreon member. I said, maybe holding the VIX put for one more day is a good idea, right? Even holding for one more day after today might be a good idea. According to data, that's the most likely you will yield the highest profit. But because the way how we're trading right now, we have a system and we sort of have our own situation. Like, it's not really like a situation. It's like we're trying to play a little bit safe here. I'm trying to teach more of my members, Patreon members, YouTube subs, Discord members more about risk management, because I think I did super poorly in the MMAT situation. And we're slowly recovering. Mainly like really faster than other people, and we really want to stress that. And a lot of dads are using their 401k and their retirement money to trade, and really sometimes maybe you want to diversify your portfolio a little bit and sort of allocate the money smartly, so when you actually see a really good speculative play, you can actually take the money from a very safe place where you park the money, and you make those plays, and later, if those plays doesn't turn out, then you can leverage those money back into safe plays, and then sort of like buy some safety calls and those kind of stuff, and sort of recover from the loss. And the best case scenario is the speculative play plays out, then you see a significant hefty, not really hefty, it's not really a good word, you see a significant increase on your portfolio value, right? And last thing we want to talk about is the potential interest rate hike by end of 2024 to about 3%. We deduct this number from how J Money really proposed the rate. So the idea is you want to make the inflation somewhere around 2%, and then in order to do that, you sort of have to raise the rate so then it can counteract that. And then if you do the math with current rate, with the current inflation, we rest upon 3% by the end of 2024. For those of you who already restructured your student loans, make them fix at today's interest rate, or I helped one of my friend restructure his student loan to a very low interest rate for a long period of time, and he's really grateful, and I'm really happy for them. And it might be a good time to do that because interest rate hike is actually inevitable compared to tapering. It really depending on like the inflation rate and when this entire economic situation last, or when or how long COVID is gonna last. COVID is not really gonna go away, but the fear isn't going away, right? And depending on what happens by the end of 2022, 2023, and the beginning of 2024, we will see all of those dominoes unfold. Okay, hopefully you guys love this video. And if you have any questions, comment down below. And this is it. See you guys on the upside.